As the U.S. election draws nearer and more rate cuts by the Fed are expected, we look to business owners and seasoned investors for their reactions. From unexpected surprises over the last few months to mountains of uncertainty, what signals should you be focusing on? We're going to discuss that right now on UBS Trending. Hi, everybody, and welcome to UBS Trending. I'm your host, Anthony Pastore. Thank you for joining us. My colleague from the Chief Investment Office, Paul Shao, is here in the studio with me to talk about the Q4 CEO Macro Briefing book. And we're going to get into the details of that in a moment, Paul. But I wanted to, first of all, welcome you to the show. Something that I think a lot of our viewers have heard us talk about since the beginning of this year is this sort of shift in economic data. We started off the year really strongly. Unemployment was still at multi-year lows. Jobs were growing. Sometime in the summer, in our August reading for the July numbers for unemployment, they dipped. And everybody remembers the market reacted pretty significantly to that. We saw some declines in S&P 500 and rise in rates, et cetera, et cetera. And now we've kind of shifted to the other direction again, having another recent jobs report come out where unemployment fell to 4.1%. So we're actually seeing unemployment getting closer and closer to those multi-year lows. Just give us your sense of making sense of that, first off, and how it kind of impacted what you were writing about for the fourth quarter version of the CEO Macro Playbook.
Absolutely. So I think a lot of business owners, investors, we're certainly still in an unprecedented recovery. And I think there's a lot of apprehension by business owners and the market about how to interpret economic indicators. Do they hold the same signal as they used to? And for us, I think the easiest way to describe this environment is not too hot, not too cold. You mentioned that in the beginning of the year, the data was running hot, both on the jobs front and the inflation front. And that actually helped spur the equity markets to go higher because of this sort of above trend growth conditions with the expectation that we have rate cuts incoming. That sort of slowed down in the summer when the data was a bit too hot and investors started to take down their expectations of rate cuts. And then now we're sort of back in the beginning of the year where it's still a really robust economic environment. And we did have that 50 basis point rate cut in September with 2 more 25 basis point cuts expected for the rest of the year. And if you look at the chart on the screen, this is Bloomberg's economic surprise index. So a reading above the 0 mark is showing that economic data is coming better than expected, and then reading below is data getting weaker than expected. And you note that it's right about neutral right now, which is what we're expecting as a not too hot, not too cold environment, which is actually pretty good for not only business owners, risk assets, but for policymakers who are keen to cut rates even further.
Yeah, that Goldilocks scenario is something that I think a lot of investors feel comfortable with. What a round trip from the dip we saw in July and August to what we see, as you saw in that chart most recently, the last week or so. The question then kind of becomes, okay, so we know we have an election in just about 2 weeks here in the U.S., and all eyes have been on this election for a very long time. So there's a lot of uncertainty around that at this point. The Fed did cut, as you mentioned, in September, 50 basis points, which was maybe a little bit of a surprise. I think maybe folks thought maybe they would go 25, maybe not 50, but they did 50, and we expect another 50 before the end of the year. How should business owners feel about that and the trajectory of the Fed?
Absolutely. So interest rates have been a very big deal for business owners in the U.S. We haven't seen this level of interest rates, especially rise that fast from that hike in 2022 in recent memory, certainly through the last cycle. So this certainly was a shock to many business owners, and a lot of economists and policymakers thought that the risk for recession was quite high in 2023, as well as this year. However, growth has definitely kept up, and the Fed has been, I think, quite good at communicating that we are in a cutting cycle. So you mentioned that the jobs numbers has been better than expected in September. I think that has caused some in the market to take down their expectations for rate cuts, but I think that bar is still very high. The Fed, to us, seems pretty convinced that the labor market is worth protecting because that's key to prolonging the cycle. And if you look at the chart that we have on screen, we had 100 basis points penciled in for 2024, another 100 basis points through 2025, And even if we have that level of rate cuts happen, and we get to about 3.5% by the end of next year, that's still above what a lot of economists and I think a lot of policymakers think is neutral territory. So that does give the Fed a bit more scope to ease rates or ease in other ways should growth come in weaker than expected. That's all to say we are in a cutting environment, so that matched with the not too hot, not too cold economic environment that we mentioned before is a pretty good place to be for both investors and business owners.
Right. And what's interesting about it is you look at the data itself. We just had retail sales recently, and those came in strong. Always we talked about the jobs numbers kind of going back the other direction. So like we're seeing unemployment decline again. It's interesting to see the Fed in this kind of environment that we're in, where it looks like the economy is on a fairly strong footing, although maybe it's getting a little bit softer, to continue to cut rates. But now they're in this cycle. It's hard probably for them to start to go backwards. I don't think they would raise rates, but keep it neutral. But our call hasn't changed here in CIO at this point.
No, we penciled in 100 basis points for 2024, 100 for 2025.
Right.
And we still expect, it's a really high bar for the Fed to pause this year for us. So we do expect another 50 basis points for the rest of the year, even with the better than expected data today, as well as the ones that came out for the September jobs report.
So let's go to the election again, because it is the biggest topic probably. Besides the Fed for 2024, it's always been about the election as well. On the business owner side, what should they be keeping in mind? And by the way, I know you'll probably mention this as well. We recently did a survey of business owners and investors. So there's some data in there, how they feel about both candidates, how they feel about the economy being the number one sort of voting sticking point for most people. Tell us a little bit about the business owner side of the election.
Absolutely. So one of the great things about working at UBS is that we get to survey our clients, a lot of them who are business owners and investors themselves. And in our election series, Election Watch, just came out with the results of some of the surveys. And I think that they're quite interesting. For more than 4 out of 5 business owners say that the economy is the top thing that they have in mind. And of those, our business owner clients, there's a slight preference for Trump at around 53%. But interestingly, for our investor clients, that has shifted. There's a slight preference for Harris. And I think that speaks to the dichotomy between probably like lower tax cuts, more stimulative environments, especially that benefits larger corporations, versus a perception of more stability, status quo that we've had from the Biden administration to continue under the Harris administration. Remember, under the Biden administration, S&P has reached new highs very consistently year from year. So I think that expectation from investors is set to continue. Another thing that I think is interesting to point out is that while our business owner clients say that the economy is the most important thing, the surveys suggest that they are far more optimistic today than they were in 2020. So under this backdrop of the economy, I think it's still quite good. They are waiting to hear what sort of policy they have heard the policy proposals by both Trump and Harris. And I think there are some pros and cons, but eventually the impression is that it is somewhat of a wash in terms of there's not one candidate that looks much more economically favorable than the other ones.
Yeah, and we always talk about margin of error when it comes to polling and surveys, and so when you look at the margin of error, it really is still split 50-50, even with our survey participants, and then obviously we know nationally, we look at the polling, it's between 3 to maybe 5% on either end, so it's a nail biter, although as we get to election day.
Absolutely, and I guess I didn't know what to expect from our the survey results.
Right.
But it's pretty evenly split in the same way that it is throughout the nation.
Absolutely, yeah. So even in the microcosm of the clients that we surveyed, the sentiment is pretty much the same. And as you mentioned, the economy for both investors and business owners is the top issue at like 83 and 84% respectively. So we know that's what people are thinking when they go to the polls. You're pulling the lever for the economy, which is pretty much a standard. We talk about it in every election. That seems to be what really is the most important issue for most people. Looking ahead though, Paul, as we're wrapping up, what should business owners expect as we go towards the back half? Because we're talking about Q4. We have, again, we're expecting the Fed to cut again. We've got the election. Hopefully we'll get results within a few days of Election Day. And so what should business owners expect as we go down the road into the end of the year and into 2025?
Sure. I think one part of the market that hasn't performed as well as some would hope would be deal-making activity. That's your private equity, M&A, IPOs, VCs. We thought that expectations of lower rates would be a catalyst for this activity to really accelerate. And it is somewhat better in 2024 compared to 2023. And as we see from this chart, in rate cutting cycles that avoid recession, risk assets tend to do really, really well afterwards, even during election years. So we think that once we get more clarity about the election, volatility tends to go down. That tends to be good for deal-making activity. Once there's a little more clarity on the durability of the Fed's rate cutting cycle, because I know that there are some wobbles about can they actually cut twice more this year, and if they do, I think those two in combination are risk clearing events and actually a pretty powerful catalyst for deal making activity to accelerate in Q4 and then going into 2025. So I think in general, given the rate cutting environment, given the benign economic environment, and given more certainty in the next few weeks, hopefully, that bodes really well for our business owner clients.
Yeah, hopefully is the operative word. We're all keeping our fingers crossed. There has been so much uncertainty up until this point this year that we're all looking for a little bit more clarity or certainty, as the case may be. Paul, thank you very much. Good to have you here. We'll have you again soon.
Yeah, thank you.
Great. Thanks, Paul Shao from the Chief Investment Office. And thank you all for joining us. For more information on anything Paul and I talked about today, make sure to visit our Insights website at ubs.com/views. Plus, you can follow UBS on all the social media channels, LinkedIn, Facebook, Twitter, as well as Instagram. Follow us at UBS Trending. So there's content from the studios there that you're not going to find anywhere else. And as always, if you have questions about your portfolio, make sure you're talking with your financial advisor. Until next time, I'm Anthony Pastore. Have a great rest of your day. And remember to keep your eyes on what's trending. We'll see you soon.